Hello and welcome to the Investing on the Go podcast by FundCalibre. I'm Ryan Lightfoot-Brown, and today we're speaking to Simon Moon, the elite rated manager of the Unicorn UK Smaller Companies Fund. Simon, thank you very much for your time this morning.
No, thank you.
Now, UK companies, both large and the small ones that you invest in, fell a lot more than their developed market counterparts in the sell-off earlier this year, and they've bounced back slightly less. While other developed markets are now back to the levels they were at the start of the year, the UK is still down some 20% or so. Why do you think this is?
Well, there are a couple of reasons for this, but Brexit, essentially. There's this uncertainty overhanging domestically focused companies, but basically just UK companies in general. We've all seen how the market just absolutely punishes uncertainty across the world through March and April. And you still have a large element of uncertainty with UK-focused companies, and that is the I suppose, spectre of a hard Brexit is still on the horizon. That uncertainty has carried on overhanging them and has not allowed them to recover at the rate at which other developed markets have recovered across the world. What I would say is there is a sort of second dynamic to this, in that when you look at the sort of MSCI World Index, for example, that's basically should be read as MSCI US plus a few others, because the US is such an important factor of those. When you remove the US from the MSCI World, so you get the MSCI World ex-US, it's actually down a few percent year on year. That's how important the US has been to driving, I suppose, the picture of the UK's underperformance. And within that as well, you have the tremendous share price returns of the FANGs, Facebook, Apple, Amazon, Netflix, Google, over that period. And also momentum-driven trading as well, with the likes of Robinhood traders. These are guys stuck at home, can't bet on football, can't bet on American football or baseball. And so they're just picking stocks to punt. And that has really driven momentum in the US as well. So you've sort of, it is without a doubt Brexit, but I think the picture is being made to even worse by what's happening in the States.
And so perhaps going on to your portfolio, you obviously engage a lot with your companies, with them being a bit smaller. What are they saying about how they've coped with lockdown? Are they seeing any of their competitors go under? And are they worried about a lengthy recession, this sort of double dip that we're talking about? Or has demand started to pick up already?
It really is a mixed bag. You've got companies that are coping really well throughout this, and you've got companies that are finding it harder. We speak to our investee holdings on a very regular basis. I've spoken to several of them, more than 2 or 3 times over this period. And they've made themselves very available. And one good thing about, I suppose, this new environment of working on Microsoft Teams and Zoom calls, etc., is that everyone is more readily available. Like I say, some I've spoken to 3 or more times. What you saw, what we observed through March and April was what felt like blood on the floor. It felt like companies were all seeing a very uncertain outlook, but some of them were updating with revenues off 80-90%. Absolutely unable, refusing to, and unable to provide forward-looking guidance in their statements. And you can't really blame them for that. The world was changing. What you saw subsequently in May and June, the updates from these companies was almost like a collective sigh of relief. And what we've seen is the gradient of recovery has been faster and steeper than we would have expected, I think, over that period. You've still got this element of uncertainty, but one of the beauties of investing in small companies is they're able to react very quickly. They are nimble. And, hats off to the government. What they have done, the support they've given as well, has stopped a number of people being made redundant, and has allowed businesses as well. Other actions have allowed businesses to gain access to funding, which in most cases they haven't needed. But the fact that it's been there has been a tremendous support for them planning for the future as well. So in May and June, you did see this sort of collective sigh of relief, this sort of guidance of what was happening. It may be down 15-20% year on year, which isn't good in anyone's book, but compared to how it was looking a couple of months earlier, it was comparatively fantastic. And I'd say as well, within the portfolio, there's generally the companies, as it's something we screen on, the companies tend to have very strong balance sheets. About half the portfolios have net cash on the balance sheet. Of those that have net debt, it's around 1 times EBITDA. So you had sort of this dynamic of a really uncertain end market for most companies across the market, and you had to sort of take a view on that. Investing in small companies, they tend to operate in single verticals. It tends to be a little easier to get a handle on what the drivers are for these businesses. But if you've got a business that's well financed, it really takes a load off, because if you've got this uncertain outlook and the potential burden of unmanageable debt over that period as well, that does increase the likelihood of companies going bust, which I'm pleased to say within the portfolio. The companies are very well financed, as mentioned. And we really put them into 3 baskets, continuity, resilience, recovery. And in March and April, it was certainly based on the sort of resilience and recovery baskets. That was certainly overweight there. But as we've come through that period, you've had far more companies sort of, I suppose, be promoted up into the resilience and into the continuity, the likes of EMIS, which is a healthcare software provider to the NHS. We've got some computer games developers in there as well. They obviously did quite well. In the resilience side, you've got some Domino's Pizza, which they had to change their working practices somehow, but a lot of people were ordering pizza from home. So there was a great deal of change that's occurred over this period, and will continue to be the case. Some companies have actually taken advantage of it. Some companies have fortunately been business as usual, and others have had to adapt to it.
Perhaps sort of looking forward at the next stage, some of the government support starting to run out now. There are sort of rumours and sort of conjecture about a second lockdown. We've seen sort of localised lockdowns. Are your companies worried about that at all? Lots of them are geographically specific. So many of them are especially the industrials, they will be in one particular region within the UK. If you got a lockdown in the West Midlands, castings, for example, would probably struggle at that point. But it's so specific. I don't really think you can predict those. What that would be better for the country as a whole, those localized lockdowns would, I suppose, smooth the recovery out of this, rather than having another complete national lockdown would be very detrimental to the country. Thank you. And one of your sort of larger sector weights kind of alluded to it, sort of the engineering type companies. The UK has had a great history of engineers, like the Brunels, Stevensons, for example. But British engineering today is not quite as sort of big as it was then, mostly because everyone's focusing on technology. I know you said you've got some of the gaming stocks where the British companies are doing very well, but can you tell us a little bit more about sort of the engineering sector and what you like so much about those companies?
Yeah, there's echoes of those names that you mentioned. Yeah, we're a country with a huge heritage in industrial engineering, birthplace of the Industrial Revolution, and that does leave an indelible mark. And I think what you've seen over the last 200 years since the birthplace of the Industrial Revolution is it's occurred, but you've got the lasting legacy of it is really high quality niche engineers throughout the UK that are just, they're smaller. They're world leaders, but they're smaller. So in the numerous smaller companies index, it is I think it's the largest sector. When you look at industrial goods and services as a whole, I think it's about 17%. So it's a pretty big sector as it is. Industrial engineers are a smaller element of that. But if you look at the whole, I'm fairly sure it's the largest sector. But it's very well represented within the UK Smaller Companies Fund, because these are world leaders. We don't pat ourselves on the back enough for it in the UK. It's something we're very bad at as well, patting ourselves on the back and giving credit where it's due. But these are world leaders, but they're in really niche areas. They've got the likes of Goodwin, which is a company that just so few people have heard of. It's right in the middle of Stoke. It must be one of the primary employers in Stoke. And it's a world leader in steel casting. Yeah, this is a huge scale. This is sort of outlines for boats. This is giant flow controls for nuclear power stations. This is sort of large scale parts for controlling sort of nuclear contaminated waste and that sort of thing. It's 100,000 tons. I think there's 2 other companies in the world that can forge and cast steel of that size, and it's walking around the sites like I did about a year and a half ago was the last time I was up there. It is genuinely awe-inspiring and fairly mind-blowing how large these things are. But a complete world leader. Just a quick example, they make the Rolls-Royce submarine engine, which is the most powerful gas turbine engine, I think, at sea. And they are an absolute integral manufacturer of a serious component for that. But I could reel off a few others, but I'm conscious of time. But yeah, we're really fortunate in this country to be very well represented by a number of pretty small scale engineers that are just absolute high quality companies.
Oh, it's an amazing testimonial. Thanks, Simon.
Yeah, sorry, I get very excited about it.
It's great to hear. It's great to hear. And one of the other industries that we've sort of touched on a couple of times is computer gaming companies. Which ones do you own that our listeners may have heard of? And do you think they'll remain as popular now once everyone's back at work and at school?
Yeah, that's a really, really good question. You have had the lockdown boon for these companies, people staying at home and in many cases sort of twiddling their thumbs, unfortunately. And if they're doing it over a joypad with one of these companies' games, that's all the better for us. You mentioned it earlier, but we have a pretty rich heritage in the UK as well of developing computer games. I mean, we've been sort of doing this hobbyist since the 1980s, and which has sort of grown into a pretty serious industry now. Two we have are Frontier Developments, and which have I suppose the theme park management or managerial style of games. So they have Planet Coaster, Planet Zoo, which are, as you can probably guess, games where you make theme parks and zoos and control the guest experience. And these are really in-depth. You can control the amount you charge people for popcorn and what's in the ingredients and how much you promote and how long the queues are and where they are and where the loos are and that sort of thing. It's some people love it. It's probably not for me, but I have played on that game and the zoo one as well. They also do Jurassic World Evolution, which is a huge license for them. Was incredibly popular at release. Again, it's you're managing a sort of dinosaur-based theme park called Jurassic World, which goes wrong and repeatedly goes wrong, unfortunately, and you have to sort of control all these flashpoints of it. One of the other computer game developer we hold is called Codemasters, and they have the F1 franchise. They have various other driving franchises as well, but their main one is Formula One. What they've done very successfully is really engage with esports over this period. So you've had this dearth of sporting activity. So if you can have a virtual version of it, all the better. And it gets new eyeballs of people that like F1, but never really viewed themselves as computer game players before, and have now suddenly got very interested because they saw a whole F1 series played out virtually on one of Codemasters' previous iterations, Codemasters F1 2019. And the sort of reintroduction of Formula One in a physical form occurred, which coincided with F1 2020, which was released a couple of weeks ago, to tremendous critical acclaim, to be honest. It really is. I think it's on a site called Metacritic, which is a collator of game reviews. It's, I think, the most popular or highly rated game on Xbox, very highly rated on PC and PlayStation. And their sales have been, I'm sure, very good on that as well. I think the dynamic you were about, whether people will continue after lockdown ends, they will obviously have less time to play games, so they will game less. But what you've had here is a permanent increase in your customer base. That people just wouldn't have touched computer games before, just would have viewed it maybe as an activity they didn't think they had any interest in. You've opened the door to them, and you've not opened the door to them in a sort of physical format where they've gone in and they've bought a disc and then leave the shop and play it a few times and forget about it. They've all bought it digitally, so they've downloaded it, which A, is better margin, which is fantastic for the developers, but B, it's a route to the customer, a direct route to the customer, so you can see where they've engaged in your game, how much they've played it, and you can keep them updated on improvements to the game, updates to the game, new elements of it. You can really bring them back to the game and keep them engaged in it, which is a customer experience that go back 5 years in computer gaming, or 5 or 10 years, and you wouldn't have had that at all, or it would have just been a minuscule aspect of your customer base. And now you've got all these new customers. Yes, they will play less once lockdown ends, but they will be engageable with.
That's really interesting. Thank you. Stepping back a little bit, what is sort of your outcome for UK smaller companies? I know we talked about the Brexit overhang that's going there. Do you see some resolution later this year, or has perhaps COVID affected the outcomes of Brexit more so?
That's a very good question. I think the spectre of a hard Brexit does overhang many UK companies, which is really unfortunate. I think if you canvass all our investee companies, the vast majority would see that as the least preferable outcome. I suppose with the COVID environment you do have, the disruption caused by hard Brexit would probably come out in the wash a lot faster than it would, given that the world is changing a lot faster. If that unfortunately did happen, but I think everyone's absolutely hoping for a sensible resolution to it.
And I imagine the companies that you've described being the sort of niche industry leaders and sort of very good at what they do, they can perform well regardless of sort of the Brexit outcome. Yeah,
absolutely. I mean, they're very well insulated because of that. If you can't get their product anywhere else, you make sure you get it from them, right? That is definitely the case. And you would expect all of them to fare better, but I'm sure that for all of them, the most preferable outcome is that sensible agreements are made, and there's as friction-free trade as possible with our European neighbours and international neighbours.
Absolutely. Well, let's hope so. And so, with those niche companies, why do you think so? It's the UK, the smaller companies in the UK, that are the ones that can be able to outshine?
Well, the historic record for a start. I mean, if you look back over the last 65 years, there are some very serious studies going into this, and it just shows continued outperformance for UK smaller companies. I think on a compounded basis, the NSCI, the bottom 10% by market cap of the index, has returned about 17% on a compounded basis per annum versus 11% for the all share, and over a 60 plus year period. That's obviously translates to a pretty huge total return outperformance. And why do they outperform? They're small, they're nimble, they're able to react really quickly, like we've seen over the last few months, to very trying economic conditions. They can right size quickly, and they can scale up quickly as well. They're able to grow. It's the law of small numbers, if there is such a thing, and that it's far easier to double a workforce of 100 people or revenue of 100 million than it is something far, far larger. And that sort of small and nimbleness just can continue. You also have a lot more skin in the game as well. Management stakes within the businesses tend to be far higher further down the market cap scale, and that keeps everyone's eye on, well, I say the prize, but basically cash generation. And cash generation is the lifeblood of businesses, so that keeps them ticking over well. I suppose for a fund manager like me at the smaller end of the market cap scale, it's a really drastically inefficient market as well. And MiFID II has exacerbated that. So the inefficiency of the market is, when you compare the number of analysts looking at FTSE 100 companies to those looking at small cap companies, you can't really compare them, because it might be one or two or maybe zero looking at a small company, and it might be dozens looking at a large company. So you can't, in my opinion, take a different view on I suppose the meat and bones of a company out there, but at the smaller end of the scale, you absolutely can, and the prices are often, like I say, very inefficient, wrong in the market, and that gives you just a great opportunity to pick up some hidden gems. And as we've seen again in the last few months, small cos, they're hit harder when the market sells off. Volatility hates small companies, and uncertainty does as well, and it hits them really hard. But they also recover faster as well. And in every major market sell-off we've seen since I've been a fund manager, since I've even been looking at the markets, they've sold off harder, but they've always recovered harder as well. So it does provide really good opportunity and fairly clear entry points to get into small companies as well.
Anyway, Simon, that was really interesting. I'm sure we've used a lot of your time, so thank you very much for giving that to us today.
No problem at all. Thank you very much.
Thank you. And if you'd like to find out more on the elite rated Unicorn UK Smaller Companies Funds, please visit our website, FundCalibre.com. And if you'd like to hear more from FundCalibre's other elite rated managers, don't forget to subscribe to the Investing on the Go podcast for more content. Please note that these are unprecedented times and the market can react very quickly to news. The views expressed are at the time of recording and could change. And remember, we've been discussing individual stocks to bring investing to life for you. It is not a recommendation to buy or sell. The fund may or may not still hold these stocks at the time of listening.